So how to pay yourself as a small business owner. Hey guys, it's Lee here and welcome back to the channel where I teach entrepreneurship through experience and help you to start and run a successful business. In this video, I'm going to show you how to pay yourself as a small business owner to maximize efficiency and get more money in your pocket rather than in the taxman's pocket. If you listen to all these tips in the video, just following one of them could potentially save you thousands in tax, which you won't have to pay to the taxman. Does that sound good? Yeah? Well, smash the like button and let's get into the detail. So you've started a business and you've started to make some tidy profit. First of all, well done. I take my hat off to you for having the guts to start a business and start having the determination and skill to start making the profit. But you may be wondering, how do I get this cash out of my business account and into my pocket without the taxman wanting half of it? Well, I'm going to go through a few things that you need to know about being tax efficient in the way you take money from your business. Firstly, you need to decide how much you are going to pay yourself and how often you will be paying yourself. But once you've established that, you need to know the method for which you will pay yourself from the business. For example, there is the obvious one, a salary. There are dividends, stock options, annual bonus, deferred payments, and the list just goes on. This is all a bit confusing, right? I know, because I've had to make these decisions in many of my businesses myself. There are two real things to consider when you're looking at how to pay yourself as a business owner, and these are the business side of things and the tax side of things. These are the only two things you really need to be thinking about when deciding how much and what method and how often you will be paying yourself as a business owner. But before we get into the bones of this video, if you're in business or looking to start a business, be sure to subscribe, and I want to help as many people as possible be successful in their business. So how much should you pay yourself? Well, we all want to take as much as possible to buy that nice new house, that nice new car, and go on them nice holidays. But you need to make sure that you maintain a good cash flow in the business. I've said this before, but cash is king. And you need to ensure that you are keeping enough cash in the business to ensure your business can survive in the long term. So don't be too greedy, taking every penny out of the business. Otherwise, you're not going to be in business very long. So how much should you sensibly take from your business? Well, as with anything in business, it depends. You need to make sure that all of your business expenses are covered and that you are keeping enough in the business to pay any of your business tax liabilities. Then I would recommend keeping an emergency portion of cash on top of that, as well as a portion for reinvesting into the business to help it grow. I'm talking on a month by month basis, but what you need to be aiming for is at least 3 to 6 months operating expenses, which should be kept in cash in your business account at all times. This will allow you to cover any periods of unforeseen economic downturns and will allow your business to survive with zero revenue for that period of 3 to 6 months. We've just seen this happen with the current global crisis and how businesses can be forced to stop trading overnight. So make sure you have some cash on hand to survive things like this if it ever happens again in the future. Technically, anything over and above what I've just mentioned, you could pay yourself and your partners. But before you rush to the bank, let's look at some of the reasons and methods for paying yourself in certain ways and the best way to do this. The way you pay yourself and how much you pay yourself is going to have a direct impact on your tax liabilities, which is why it's important to pay yourself the right way. Don't forget that trying to keep your expenses as business expenses rather than personal expenses will ensure that your tax liability is reduced. For example, I've just sold my Porsche 911 and Mercedes-Benz GLE 350 and I'm waiting for my new Tesla to be delivered. Why? Well, in order to pay for cars personally, I have to take cash out of the business to pay myself. And this is obviously taken from company profits. This is taxed at 19% in the UK. If I then pay myself that money as a dividend from that profit, it's taxed a further 7.5%. Meaning that if I take, say, $100,000 from my business account, it's effectively costing me $126,000. Whereas if I buy a Tesla electric vehicle and spend that money within the business as a business expense, I know Tesla isn't $100,000, but let's use the same numbers. That $100,000 comes off my profit as a business expense, so I don't have to pay the $19,000 in corporation tax. And I'm not drawing the money out of my business as a dividend, so I'm also saving an additional $7,500. So it's effectively costing me $73,500 rather than $126,000 doing it the other way. And the other thing to consider is that I can also put all of the other expenses through the business, such as insurance and maintenance and anything else that I need to spend on the car. So I've removed a large lump of personal expense and put them into the business. I mostly use my car for business purposes, so it made total financial and business sense. I was claiming the mileage when I was doing business miles, but that wasn't as tax efficient as having the car fully through the company. And with all the tax breaks that you get with electric vehicles nowadays, it just made perfect sense. So the first way you can pay yourself to get cash out of the business is the obvious one, which is to pay yourself a salary. Now you can't just go giving yourself a £300,000 or dollar a year salary. Well, you can, but let me tell you why it's not the best way to pay yourself from your business. A salary when paid in the UK or the USA will be subject to all kinds of deductions at source, namely personal tax, national insurance in the UK, and federal income tax, Medicare and social care in the USA. The best way to pay yourself in terms of a salary is to pay yourself the absolute minimum you can without being subject to any tax or any other deductions. Depending on your state or your country, there will be a figure that you can pull out as a salary which isn't subject to any tax or deductions. This won't be a lot, but you need to check it where you live. In the UK, this amount is currently £9,500 per year for national insurance, and depending on what your tax code is, £12,570 a year before you start paying any income tax. So if you want to maximise your tax or other deduction efficiency, set your salary at somewhere below £9,500 a year, which works out to be around £791 a month. The second way you can pay yourself is through what is called dividends. A dividend is a distribution of cash or stocks to the shareholders of a company. If you are a company director, then you are a shareholder and you will own 100% of the shares if you are the only owner or director. Dividends in the UK are currently taxed at 7.5%, so every time you pay yourself a dividend, you lose 7.5% through tax. But if you were to pay yourself the same amount through a salary, you would be taxed in the UK at 20% on anything above £12,570, taxed at 40% on anything above £50,270, and at 40% on anything above £150,000. So you can see how this makes sense as the best way to pay yourself through your company, as the aim of the business game is to get as much money out of your business as possible by using all the tax breaks available to you and still staying within the tax rules and tax laws of your country and your state. So what is the best way to pay yourself? My personal preference is to take a minimum salary and top it up with dividends. My wife works in the business too, so we can both take minimum salary and also share the dividends using each other's personal allowances and stay within the tax laws of the UK. But how best to take money from your business depends on what type of business structure you have. An LLC, limited companies, sole traders, sole proprietors and partnerships are all taxed at the end of the year based on their profits, regardless if you take the money out of the account or not. So how you pay yourself largely depends on what kind of business structure you have. So make sure you start a business or change the kind of business you are in order to minimise your tax liability and to put more cash into your pocket. Remember, the aim is to be as tax efficient as possible while staying within the law. There are many ways for you to save tax which are perfectly legal, but you need to learn how to do things in business to make sure you and your business are tax efficient, and that will help you maximise your profits and get the most out of your business. If you're looking for how to increase visibility for your business, then watch this video next. Please subscribe, and if you've got value from this video, please hit the like button, and I'll see you next week. Thanks for watching.